Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
Let's get to something else that is important on our radar, and that is the U.S. Central Bank, which kicked off its two-day meeting on monetary policy today. That Fed decision, of course, comes tomorrow at 2 p.m. Wall Street time.
Well, earlier today, we got two data points. U.S. consumer confidence fell in April to the lowest since mid-2022 as Americans' view of the labor market and their outlook for the economy deteriorated. And a broad gauge of labor costs, Carol, closely watched by the Fed, increased the most in a year, illustrating persistent wage pressures that are keeping inflation elevated.
It ain't easy. That's the bottom line on all of this. So to put it all into perspective and how it may impact potentially how the Fed is thinking about U.S. monetary policy, back with us is Steve Skancke. He's Chief Economic Advisor at Keel, former U.S. Treasury and White House National Security Council staff member. And then also with us, of course, is Yelena Shulyatyeva, Senior U.S. Economist over at BNP Paribas. Yelena in New York City and Steve in D.C. Yelena, I want to kick it off with you, if we may. Today's data, once again, reminding us that it is kind of a bit of a tricky spot sometimes for the Fed to be in right now in terms of mixed consumer data that maybe makes it a little bit more difficult to find the right way forward, if you will, when it comes to monetary policy. What do you make of the data, and what is your economic forecast right now?
So I think today's data really supports our call for the Fed to stay on hold until December, and but for the next move to be a cut. So if you look at inflation data today, wage inflation is still elevated. So that does not give Fed enough confidence that they can start moving anytime soon. So at the same time, you look at the conference board data and in particular the labor market differential, and that tells you that the labor market is rebalancing. It's not overheating and it's not going back out of balance. It's actually getting back into balance. And if you look at jobs are getting a little bit harder to get. They're not as plentiful as just a few months ago. So consumers are taking a signal from what they hear, what they see in the labor market, and they're telling us that. So I think here the Fed is still going to cut rates. That's the next move, not a hike. But I think they will have to be patient and see how inflation subsides.
Steve, is that also your position over at Keel Point? Is that what you think is going to happen? The Fed's next move will be a cut, but they will stay on hold until, the end of this year, December, like Yelena just spoke about?
Yeah, absolutely, Tim. The Fed very much wants to start cutting rates, but stronger inflation and even strong economic activity just have them in a holding pattern. The Fed is sort of stuck with a couple of things. They need to have confidence that inflation is coming down, and right now it's stalled. The employment cost index is annualizing at 4.4%, and the Fed has to depend on productivity growth, which has been annualizing around 2.5%, which gets them toward their 2% inflation with wage growth. But that's a little bit hard to depend on. The other thing is, consumer confidence has been up 0.8% the last 2 months, which is record growth. But from the conference board numbers today, consumers are weary. They've been reducing savings to continue spending, and they continue to be overwhelmed by high prices, even though the rate of inflation had been moving lower until it sort of got stuck.
Okay, so come on in, Yelena, and talk a little bit about where you think the Fed, how you think the Fed kind of deals with this. Because, as Steve said, things are kind of stuck right now from, getting that last mile of inflation under control. Is it proving to be even stickier than the Fed thought it would be?
Well, I think we will see continued deceleration in inflationary pressures. We may even see something like 2.5% on core PCE by Q3, which technically would allow the Fed to start easing, but then, election comes into play, and for, risk management purposes, you may want to wait till December. I think we will continue to see inflation to decelerate. Consumers are spending, yes, but they're spending because the labor market is doing great and because their balance sheets are so healthy since they deleverage so much. But nonetheless, there are some, pockets of weakness here and there. So we mentioned consumer confidence data today pointing to some signs of deceleration in the labor market. We also see some pickup in delinquencies. All these things that spooked recessionary, fears last year, they're still there. It's just not, we're not talking recession anymore. But we are talking about some moderation in economic growth, and we are talking about continued progress on inflation. The Fed just needs to be patient. They just need to not overreact to one data point here and there. And I think the conditions will be appropriate for them to start adjusting rates slightly by the end of the year.
One thing I wanted to bring up, and I've been thinking about this a lot, is, we keep saying, oh no, wage pressures. Oh my God, people are being paid more money. How terrible that is because of the impact on inflation. Isn't there some balance? And Steve, let's bring you back into the conversation. Isn't there some balance of this is a good thing, and maybe we're moving more towards a livable wages, especially for some hourly workers where this isn't just a job for a teenager, they're supporting their families. And that ability then they can spend on things. So what is that balance economically that you think about, or maybe you don't think about it, but I do, in terms of we're paying maybe workers maybe what they at least should pay or are long overdue, that they haven't had the ability to have higher wages. And then that translates into economic activity. That's a good thing.
Well, you're absolutely right, Carol. And Jerome Powell actually thinks about that a lot. If you sort of go back a couple of years, maybe 3 or 4 years, even before the pandemic, he was talking about wage growth being more broadly distributed throughout the labor force. And that only sort of happens as you come toward the end of the economic cycle. Mm-hmm. So for wages on average to be up, almost 4.5%, that is a good thing. And if we can rely on productivity growth to continue in the neighborhood of 2.5%, that's how you actually raise standards of living, particularly for some of the lower income groups. Right. But the Fed is flummoxed by what's happening with the metric for housing inflation, for shelter. If you look at core CPI inflation, right, 3.8%, 12 months ending in March. You can take out shelter, it's 2.4. Core PCE inflation, same, 2.8%, 12 months ending in March. You take out housing, it was 2.2%. And not that they can ignore housing inflation or shelter inflation, but we all know that there's just some funniness about how that gets calculated and how that factors in. And while the Fed would like to cut rates to get that economic benefit broadly distributed, they're sort of stuck with the number that they've got.
I want to save 30 seconds for you, Yelena, in terms of this concept of higher wages. And, some of that's good, that people are finally maybe making more money.
More money is good, for sure, but you need to have productivity growth, and this is I totally agree that's an essential part. So if you have productivity growing, wage is not a problem. Unfortunately, I think productivity growth is not gonna accelerate here, and not until we get some AI enhancements. We have to rely on labor force growth for now, and That's the issue at this point.
Well, the White House Correspondents' Dinner, they made a joke. Colin Jost said, hey, all you journalists, get ready to be replaced by AI.
I wasn't going to make that joke. I was just going to ask for the AI enhancement for doing the dishes. When's that happening?
That would
Think
be
about the productivity
innovation
there.
and disruption. Steve Skancke and Yelena Shulyatyeva, thank you so much.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
So let's get to one stock that is definitely a standout performer in today's overall lower equity trade. Eli Lilly shares soaring, up the most in more than 9 months, hitting an intraday record high. This as a brighter outlook for 2024 raised the potential ceiling for new weight loss drugs even further in the eyes of analysts and investors. It's just on a tear.
It really is. Back with more on the company and this investment play that continues to just dominate this year. We got Bloomberg News health reporter Madison Muller here in the studio. Madison, I'm wondering, what was the surprise here when it came to
It's a good question.
weight loss drugs? Because this doesn't surprise me, and I'm not following this company as closely as these investors are.
Yeah.
We knew these things were gangbusters.
Yeah. I think what's interesting is, like, I wasn't totally surprised by this either, given how much demand there is for these products. But I guess there was some investor and analyst concern going into earnings because the shortages have been so bad. And so they needed some reassurance that even though there are widespread shortages, I mean, people are driving like 3-4 hours to go to a pharmacy that has Zepbound in stock, that Lilly's still able to sell enough of it and to also see supply getting better in the second half of the year and into next year, you know, enough so that they can raise their revenue guidance for the full year, raise their profit guidance for the full year as well. So there was, I think, at first a little bit of relief and then continued optimism. Like, I mean, any good news for Lilly is like great news automatically. So I think it automatically just pushed
Why do you
the
say
stock
that?
up more.
Any good news is great news for Lilly.
The margin for error is so slim with them. Like, if there is bad news, it really could affect them. But I think it goes the opposite way too. Like, there's just everything the company does is so closely watched, and the smallest news is like ends up being a big deal, especially when it comes to these weight loss drugs, because so much is riding on them. So it's just, this is seen as, you know, a great thing.
What's the risk there? I know that's where your head was going, Carol, because if this is Eli Lilly we're
like
talking about.
The scale of Zepbound on one side and all the other drugs on the other side.
Eli Lilly does a lot more than just GLP-1s here.
Yeah, and that was the other really interesting thing is, even though they missed estimates in most of their other key drugs, including Mounjaro, which is the diabetes version of Zepbound, Trulicity, a diabetes drug that's been a bestseller for several years now, Verzenio, which is a breast cancer drug, they still raised their revenue guidance. And, you know, it was still seen as like a very good result because the story is just Zepbound.
How much of their revenue comes from this class of drugs? Do we know?
I'm actually not. I would have to pull that up. Zepbound is still, I mean, Mounjaro is like in the billions. Zepbound is still, I think it was $500 million this quarter. It was $500 million, but it just launched in December.
Right.
So it's ramping up really quickly. And Trulicity, which is also, it's an earlier GLP-1 drug that we don't really talk that much about. It's not very good for weight loss, but it's great for glycemic control and you know, helping control blood sugar for people with type 2 diabetes. That drug is in shortage also in the US and in Europe because they've been prioritizing the newer medications.
Where is the supply chain?
They have supply. I think they were talking today on the call that there's like 8 plants, and there's a lot in the US. There's a plant in Ireland, but it is mostly in the US actually, and it is mostly they work with some contract manufacturers, but most of the supply chain is controlled by Lilly itself.
And are these, for Eli Lilly, I'm just looking at the FA page, the financial analysis page in the Bloomberg terminal. Are they classified into the diabetes category, both of these, even though one of them's weight loss?
Zepbound shouldn't be.
Okay.
Yeah.
Because it's interesting because now the diabetes category is now 57.6% of revenue.
Right.
Versus a couple years ago it was 46%.
Yeah. And Lilly has always been, I mean, diabetes is their bread and butter. They've always been in diabetes. I think they were the first US company to commercialize insulin. So like this has been their story for a long time. But I mean, insulin wasn't really like a super profitable drug, and GLP-1s are. So
That $2 billion kick up in annual sales, Madison, one thing I was curious about, does that mean the demand is that much more or the drug is costing more?
It's going to mostly be, I think, a result of increased supply. So like they are selling everything that they can make. And they set this goal of increasing like the number of sellable doses by 1.5 times, whatever that means. But they're hoping that they can make more sellable doses in the second half of the year.
They changed the dosage from what I understand. Like you get different dosages, I think, for the individual pens, right?
Yes. So in outside of the US, they have multi-dose pens, which you would think that they would roll that out in the US because it helps with the number of pens that they're making, which is holding up. Like that's one of the reasons why they have these supply bottlenecks, because the plastic injector pens are like so complicated to make. But they're only doing these multi-dose pens outside of the US, which doesn't really make a ton of sense. But yeah, so the doses, those have multiple doses obviously in them. In the US, you have 4 pens and each one contains 1 dose.
Who's coming for Eli Lilly at this point? We talk a lot about Novo Nordisk, the European sort of counterpart, the competitor here with Ozempic. Yeah. But who in the US is coming for Eli Lilly?
So we have Boehringer Ingelheim, which is a private company. It's a little bit of a mouthful to say, but they are also outside of the US. They're a private company. Zealand Pharma as well. They're close behind. Then there's Amgen, which is a US company. There's been a lot of excitement about Amgen's drug because it's taken less frequently. It's taken once a month instead of once a week. However, they are still very far behind these other companies, behind Novo and Lilly. And then Pfizer is still pretty far behind as well. So like they do have a really good head start on everyone else that's trying to get into this market. And, they're also trying to develop a pill and different formulations. So like they have a jump on everyone else.
How is the focus on these, which I get why every drug company would be chasing it, right? I mean, you think about market size and just, oh my God. But what does it mean it's not getting done? Or maybe the focus isn't there?
It's a good point. I mean, we were looking recently at it's just interesting to see how the attention has switched from COVID to GLP-1s.
Totally,
or COVID
right?
to weight loss. And this happens in the pharmaceutical industry. It's when one company has success in a certain area, then everyone sort of chases and follows behind. And we are actually seeing this, which this is a good thing. We're seeing this right now in heart disease and in neurodegeneration as well. So there's been some advancements in drugs for Alzheimer's and Parkinson's and some mental health conditions that now there's a rush to innovate in that field again too, and same with heart disease. So there is actually some other advancements, but we're just not talking about them.
We only have 30 seconds left, Madison, and this is certainly a question that has requires a longer answer. But there has been some pushback to these drugs. Not everybody's sort of on board, pointing out side effects and stuff. What's the latest there?
I think one of the biggest pushbacks recently has been price. Senator Bernie Sanders, we talked to him a couple weeks ago, and he was saying that he was going to, which I guess he did actually end up calling the CEO of Novo Nordisk and talking to him about the price of Ozempic and Wegovy, and now he's opening a Senate committee investigation into the price. So that's been a big area of pushback recently.
All right, great stuff as always. Madison, thanks. Bloomberg News health reporter Madison Muller, a must-read here at Bloomberg.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Right now, we want to shift gears a little bit because we will be shifting gears big time after the close when Amazon reports its latest earnings. And we are going to be looking for a show me moment, especially when it comes to what they are doing in AI, because we've seen it play out, whether it was Google or Microsoft, investors wanted to see, and we saw some payoff.
Yeah, the world is, as it often seems, all about GenAI and machine learning and LLMs. Is that enough for you? GenAI, machine learning, LLMs, right?
We'll see what our next guest says.
It's also its evolution and next steps was the theme at a recent BI AI event here at Bloomberg HQ that you moderated. That was really cool.
It was a really fun panel. I learned a lot. And that was thanks to our next guest and who was on the panel. We welcome Ruchir Puri, Chief Scientist at IBM Research. He's here in our Bloomberg Interactive Broker studio. He's an inventor, over 70 U.S. patents, has authored over 100 scientific publications on AI for code, responsible AI, semi-chip design, and so much more. He also led IBM Watson as CTO and Chief Architect. I could go on, but then we'd be done. Ruchir, I'm so glad you came in because I said to you when we finished the panel that I kind of learned a lot, and I feel like I wanted to kind of pick your brain a little bit more about what are the smart conversations to be having about AI that we have every day. What are the ones you're having with your team back at IBM? What is it that clients and customers are thinking about where GenAI takes them in the future?
So first of all, Carol and Tim, thank you for hosting me. I think this is, we had a wonderful conversation, but it's a pleasure to continue that conversation as well. I would really say we are seeing an inflection point in AI because we are seeing the sort of people playing with things to now show me the money. It's where is the value? Mm-hmm. And that's exactly the sort of narrative you are seeing roll out, and like the rise of open, not just open AI, but the rise of open in movement, Meta, many others, IBM and many others are involved in it as well. But small to medium sized models are where things are leading to, because when you start to really scale AI out in real production use cases, cost is certainly very, very important, because the narrative becomes about scale and volumes. Mm-hmm. And then you also start to look at where is my data, because AI and data are very closely integrated together. You want to bring AI to the data, and the data is kind of very heavy, actually.
Ruchir, we'll go. I want to jump in here because as Carol was introducing you and I was reading a bit about you earlier today, I got to wonder professionally what this moment means for you, because this is something that you've worked on for so many years. Mm-hmm. And it's now finally something that everybody's talking about, that Wall Street is really taking seriously right now. I mean, 15 years ago, you were probably like banging your head against the wall being like, pay attention to this stuff.
We were in the winter, actually. We were all wearing parkas and we're really in the deep of winter.
So what changed? Was it the processing capability? What was it that changed? Like I keep thinking about this.
Why are we at this inflection point?
Yeah.
I would really say, I usually say it, when we started Jeopardy, that was the start of the moment. I say it honestly. So
you're talking about Watson on Jeopardy?
Watson Jeopardy. And that was the moment where I would say we caused a spring of AI. Mm-hmm. We brought it from winter to spring. We didn't result in summer. I think that summer didn't arrive until that 17-character URL and a single tweet with ChatGPT that really brought this to everyone's sort of desktop, phone, and so on. And that to me is the summer where people really realized what are the implications of this technology, because we are now introducing a new abstraction level in how people can interact with machines, which is natural language. And that sort of the narrative becomes so ubiquitous that it intersects with every enterprise and every consumer use case at this point.
Is it all about ChatGPT? I mean, is there everybody that in your sphere, whether it's the clients, customers, playing around with that? Is that the starting point?
I would say less so ChatGPT, but definitely generative AI itself is the starting point. But very soon the conversation goes to, I love it, but I need to fit it in my use case. Can you bring it in my hybrid environments? Because customers or enterprises are in a very hybrid environment. They've got a couple of public clouds where their workloads are running. They've got their own premises where workloads are running. And then they start to worry about, where do you run this stuff? How do you run it? Where my data is, do you bring it to my data, or do I bring data to you in the public cloud? And it's becoming clear that hybrid cloud and AI are so closely tied to each other.
Well, and I think about this for our audience. You know, it was interesting yesterday last week, when Madison were spending so much on AI, right? Our CapEx and everything was more, and that they got penalized for that, the build out. And yet those companies that they're going to be spending money with, whether it's chip makers or that, they were benefiting. And I keep thinking about the investment landscape, like as you are working your way through this, and obviously IBM is very involved in this space. And certainly we talked about on-premise building out your own AI that's at your own offices or, where you are working versus having it up in the cloud. But having said that, how are you thinking about it? Like is it the build out people that are really going to initially, and as we've seen, benefit?
So I would really say real value will be derived clearly so far in two places. One place where one company in the world is minting money at this point.
NVIDIA.
Clear. And sort of money flows to the bottom because it's like, you're selling the shovels, as they say, at that point. And the second one will be in the use cases. So it flows up in the use cases or it flows to the bottom in infrastructure. Those two places are clear winners, actually. And I would really say from the point of view of even on the infrastructure, we are in the early innings. And I think I gave this example when we sat down last as well. Like accelerators for AI are a fast evolving space. And I usually say it, whenever anybody raises this word or says this word of artificial intelligence, it always occurs to me, if something is artificial, there must be something real. And that real is certainly among three in this room, and that consumes 20 watts, lives in a 1200 centimeter cube, and runs on sandwiches. Versus a single NVIDIA GPU or any other GPU consumes, the latest one announced consumes 1000 watts. And you need literally thousands of these. So I think just the sheer energy efficiency of acceleration should be put in perspective that we are in the early innings, and I'm extremely excited about where this technology is going to take us.
One thing that I think in the early innings that has gotten a lot of attention is how these models are trained. And I'm wondering at IBM, how you train your AI models.
So for us, obviously, we are closely partnered with NVIDIA. From a research point of view, we are doing significant amount of research in this area in terms of as we look into accelerators that will be evolving. And I just talked about the energy efficiency. Our focus is on energy efficiency, cost of deployment, and we are starting with inferencing first because that's really the volumes game. And our training is a lot on the NVIDIA stack, but from a hardware perspective and from a software perspective, we have brought our own software stack. And this is where I say it's about the hybrid cloud platform that layer that spreads across and makes the underlying hardware, if I may say, ubiquitous from a consumption perspective.
Ruchir, we only have about a minute left, unfortunately. And I always feel like this is a topic that we could spend a lot of time on it. But as we kind of day in, day out, we're talking about a lot in earnings season, whether it's a tech company or not, of just how different companies are putting it to work or at least doing their spend. What do you think is the smart kind of conversation we must be having around AI in addition to just the headlines that keep coming at us, or how we look at things critically?
I would really say the first one should be around, I'd say, responsible use of AI. Like that's, to me, is the most critical element.
Does it terrify you a little bit?
I know it too well, so it terrifies me less, I would say.
Okay. That was a long pause.
It terrifies me less. Having said that, I think there are clear implications of this technology and its responsible use and ethical use. That's the first thing. So what I call governance of AI is critical to enterprise use cases. And then obviously the bread and butter of productivity, scale out of AI, really wherever I want it deployed and so on. But I would say I would put at the top of the list the governance of AI as it percolates across enterprise use cases.
Just 20 seconds, you think we're going to get it right? Considering kind of some of the troubles we've had with social media, really quickly.
I would say I'm an optimistic person by choice.
Okay.
We would get it right.
Okay. Well,
Fingers
I'm
crossed.
optimistic too, so fingers crossed as well. Ruchir, thanks so much for taking the trip and coming in. Ruchir Puri, he's chief scientist over at IBM Research.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
A lot of headlines out of Chattanooga, Tennessee over the last few weeks. Here's just one of them, Carol. Earlier this month, Volkswagen employees over at a Tennessee factory voted to join the UAW, that's in Chattanooga, a landmark victory for the union, organizing in the long hostile U.S. South. That vote certified today, by the way.
Interesting day, and a lot happening generally in Tennessee's fourth largest city. We've got back with us, delighted to have him, Tim Kelly. He's the mayor of Chattanooga, right here in our Bloomberg Interactive Broker studio. We should note, last month, Bloomberg Philanthropies naming Chattanooga one of 25 cities selected for its American Sustainable Cities program. Bloomberg Philanthropies, of course, founded and supported by Michael R. Bloomberg, founder and majority owner of Bloomberg LP. Mayor Kelly, nice to have you in the house once again. How are you, and how's Chattanooga?
Always a pleasure. We're doing great, thank you. Yeah, things are great in Chattanooga. And again, I'll just always start as I always do, thanking Bloomberg, because we've got a lot going on, particularly around the area of energy management with EPB, our utility, and the Sustainable Cities program is going to be hopefully really transformative for us. Yeah.
All right, we're hoping we can keep you in the city for a moment and talk about something that's going on uptown.
Yeah, you went to Columbia.
I did.
You were there in the 1980s, if I did my math correctly when I was preparing
correct.
for this.
Yeah.
Okay.
Yeah.
So potentially you saw some of the apartheid protests that were happening
Absolutely.
on campus then.
Yeah.
What do you think of what's going on right now?
Well, it's predictable, but we were talking about that all morning in a Strong Cities meeting, and I think that the challenge is for mayors to bring people together, right? And I don't think you can talk about the current situation without thinking about the structural changes that have happened in society since the 80s, namely social media, right? And we've got to figure out a way to have a constructive dialogue, right, together, and cities have, I think, a very important part to play in that. But again, I think it was, I can't remember which former president it was that said, it could be worse, I could be a mayor. Well, it could be worse, I could be a college president. So I'm just...
There's always something.
Right, there's always some,
Well, how do we create a world where we can all have a conversation? It's interesting. One of the things I've loved about newsrooms, and maybe I've been lucky to be in some really great newsrooms where there's lots of smart people. Not everybody has the same perspective. And as journalists, we come on air and we just listen to everybody else's perspectives, but we have conversations.
Yep.
How do we get that again
back? Well, again, I think we're up against it because...
Or how do you do it in your city?
Well, building community. I mean, I know it sounds very kumbaya. But every city, the cities that are doing a good job are, I think, being more and more intentional about bringing people together and counteracting that divisive narrative. And again, what we've seen is the cities with the strongest senses of place are the places where, college campuses notwithstanding, are the places that are most immune to this, right? So we do a lot of work, on parks and outdoors, stuff that's used to seem trivial. But our social media channel for Parks and Outdoors has the second biggest following of any Parks and Outdoors department in the country. Wow. And we try to get people to think of Chattanoogans first and foremost, and think of them, their neighbors and what they have in common, not what divides them. And again, it sounds very prosaic, but I think it's really, really important. And the mayors I talk to spend more and more time thinking about the things that bring residents together and really doubling down on those things.
We talked yesterday about crime here in New York coming down on the subways, which is finally a little bit of good news. But one thing we have seen post-pandemic, not just in New York, but in cities around the country, is a rise in crime. Give us an update on Chattanooga, how it's looking, because that goes hand in hand with the economic development that you're trying to do in the city.
Absolutely. Well, the statistics are all moving in the right direction, but what we've seen, unfortunately, is this very strange disconnect where people feel less safe in cities, and that the feelings are that crime's getting worse, and the stats are demonstrably that they're getting better, right? And so I think some of that goes back to the media environment, right? Because fear does sell better, and certain, I don't think Bloomberg is particularly guilty of it, but certain media outlets have leaned into that more than others. And so we have to combat that. I mean, I will say we've had a rash of shootings in Chattanooga. You know, again, I'm a member of Mayors Against Illegal Guns, and stolen guns account for a tremendous, disproportionate percentage of shootings in Chattanooga, and we still haven't done anything meaningful at the state level about that. And we continue to have dialogue about how we might change it.
You know, I was thinking about that conversation we had with Joseph Stiglitz last week of Columbia, of course, Nobel laureate, but this concept of freedom, and he kind of brought up Mayor Kelly this idea that maybe we have to broaden out how we think about freedom, because right now freedom, folks who want to own guns say, well, it's my right, it's my freedom, or, you know, I have the right to own guns. But at the same time, potentially by using that gun, you take away somebody's freedom, you take away their life.
And maybe kids don't have the freedom to go to school without being fearful of guns in schools.
Well, exactly. You know what I mean? And so, you know, we've got to kind of figure out how to
we have to navigate it. I mean, Second Amendment,
and it could be guns, it could be something else. Like we can carry this
out. We're still trying to navigate that. But, you know, gun ownership comes with a heavy responsibility, and frankly, where I'm focused is on more practical ways that we can secure guns to keep them out of the hands of, because look, a stolen gun is going to be used in a crime almost certainly. Right, so you know, we're still working on it, but I will emphasize Chattanooga is a safe city. Again, if you look at any measure that you want to look at, homicides per thousand, or you know, we're a safe city, but we do battle the perception, and we continue to do that by again focusing on community and making sure that we have a vibrant downtown.
Hey, I want to talk more on economic development, because Chattanooga, Tennessee, one of those places that you want to make attractive to for remote workers.
Yes.
At the same time, we've seen companies crack down on remote work.
Yep.
Are you seeing that show up in your numbers at all?
No.
Are people having to leave because they get called back to the office twice a week and they're like, I can't live here anymore, I have to go back to a different city?
We have not seen that yet. I do think, you know, labor has a lot more power, as you started the segment, than we may realize. And so even our big anchor employers are really either 2 on, 3 off, 3 on, 2 off, something like that. So we're not.
Which they weren't before a pandemic.
Which they were not before the pandemic, and so we're still trying to again find the balance. I mean, look, from the standpoint of downtown vitality, I'd love to see all the major employers call everybody back in selfishly, but at the same time, as you say, we have a lot of remote workers because of our super fast fiber in Chattanooga. So we're finding the equilibrium, but I've not seen a dramatic shift in that regard.
If you could change one thing right now in your city, what would it be?
Wow, that's a great one. I would preserve more park space. I think our competitive advantage in Chattanooga really is our outdoors, our phenomenal outdoor space, and we're growing fast. But we really only get one chance to preserve the stuff that really is our competitive advantage, and so we're in a kind of a race against the clock in that regard.
Is it the pressure to develop it and build?
Well, yes, that before it gets to unaffordable, right?
Yeah.
And we are trying to set aside as much capital as we can, but we almost can't do it fast enough.
I don't know if you know this, but we're in an election year.
I've heard somebody mention that to me.
Yeah, and we're asking a lot of our guests who come on the program questions about this, because whether they're in politics or not, they're in politics.
We just want to know when you're going to run for the White House or something.
Well, I am curious. You're an independent.
Yes.
So do you find that you still get stuck in the national politics, the dialogue that happens?
Of course. And so my and there are a lot of other really great mayors. I was just with Ron Nirenberg, who is one of my favorite other mayors, mayor of San Antonio, who has a very similar approach. And I think what he would say and what I would say is that our job is to translate back into the practical terms of what makes a policy make sense or doesn't make sense. I was also just with Bill Peduto, former mayor of Pittsburgh, who famously said there are really 3 political parties here. I've said this, I think, on my last appearance: Republicans, Democrats, and mayors, right? So it's not that it doesn't matter. I mean, we will, I mean, again, I'm a big fan of what the Biden administration has done with the IIJA and the BIL. These are really important infrastructure programs that are going to pay dividends in terms of GDP growth for years. I'm an OECD champion mayor, and they just did a really interesting white paper about how the United States is behind our OECD peers in terms of infrastructure investment. And Tennessee, by the way, is below the national average, right? And this is what drives GDP growth. So if you're worried about retiring debt, ironically, right? These are the programs that this country needs in order to really be in good stead in the long term.
For in terms of promoting longer term growth.
Correct.
Ultimately. Yeah. Many would argue or continue to argue it's way overdue. Tim Kelly, thank you so much. Of course, Mayor of Chattanooga, joining us right here in studio.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 18 minutes left in today's trading session, getting ready to wrap up the Tuesday trade. But of course, we have a bunch of earnings coming your way after the closing bell.
Okay, so the one that we're all waiting for is Amazon. It's
Yes.
set to cross just after 4 o'clock.
Mhm.
Think it'll happen?
Yeah.
Yeah, I think it'll happen too. Caesars Entertainment is going to happen. Pinterest, we get Starbucks, Mondelez as well, among many others.
Amazon's up 18% so far here in 2024, but it'll be interesting. Certainly cloud, always important, right? They are the largest when it comes to the cloud services industry. Of course, though, we've seen a lot of competition from the likes of Microsoft and also Alphabet's Google, which, of course, we got their results last week. And it's safe to say that they've set the bar really high, especially when it comes to the AI spending or using GenAI, if you will, to actually, create some business and move some of the numbers to the upside on the balance sheet.
I think also worth remembering what happened to Meta Platforms, the parent company of Facebook, last week. You mentioned this a couple times already today, Carol, when it said that it was making a big investment. We got punished. Shares got punished.
Absolutely. They're like, okay, I get it, but we just want to see the payoff. And what if you spend too much? So this is why it'll be interesting to see the kind of payoff, particularly when it comes to AI, specifically on Amazon. All right. In the meantime, we've got a down day. Charlie breaking down the numbers. We're down more than 1% across the board on all of the major equity averages. So let's get to it. Our drive to the close guest on this Tuesday, Michael Sheldon. He's executive director over at RDM Financial Group. Michael, great to be talking with you once again. A lot of earnings. We're going to get a big one after the closing bell. How are you looking at the market against the backdrop and fundamentals of earnings so far?
Hi, thanks very much for having me. So about 50% of the S&P 500 earnings are companies in the S&P 500 have reported so far. And a majority of actually beating estimates by more than the average beat that we've seen over the past several years. So earnings are coming through better than expected. I think the issue with the markets today, unfortunately, the markets are under pressure because the inflation data we got in the ECI this morning, the Employee Cost Index, once again, was another indicator that inflation is a little bit hotter than expected. So I wouldn't be surprised to see a little bit of a pullback maybe or a high trading range within the market. We could go back and test maybe the 4,800 level for the S&P 500, which was the breakout level back in January. Over the next few months or so, but earnings overall have come in better than expected so far.
A buying opportunity if we do go back to that 4,800 level?
Yeah, I think that's likely the case. The economy overall has been very resilient. Over the past 3 months, we've generated, I think, about 276,000 jobs per month. Unless the consumer really starts to turn lower, and we haven't seen that yet. Again, remember, consumer spending represents about 2/3 of the economy. The economy should be okay. And the real question is, what does the Fed do about all this? So I think right now the timing of future rate cuts is somewhat uncertain. I think the Fed really does want to cut rates, and the Fed shifted policy in the fall of last year, if you remember, and that sort of helped the economy and the markets go on this 5-month winning streak. So we're sort of working off a little bit of that right now, and that could just take a little time.
Does it really matter do you believe in equity for equity investors, whether or not the Fed really ultimately cuts this year? Is a few basis points or a quarter of a point or a half a point, is it going to really make that much of a difference, especially if consumers continue to spend, wages are, workers are making more money, that's a good thing, and it'll keep some economic momentum. And as long as people stay employed, that's a good thing.
Yeah, I think that's the most important factor. Do individuals have jobs? Are wages rising? So wages are rising, but less than they were before. But as long as the consumers have jobs, for the most part, I think that should continue to help support the economy. Ultimately, I think the issue for the markets may be if the 2-year is back above 5%, and I think the 10-year is around 4.75 or so. So, I mean, if the 10-year gets above 5% or starts to rise rapidly, that'll probably cause some concern, especially for over-leveraged companies or companies that have floating rate debt. But I think overall the economy can continue to do well as long as interest rates sort of stabilize or don't go up too rapidly.
Do you think, I mean, is that something we could test in the next few months, a 5% on the 10-year again?
I wouldn't be overly surprised at this point.
Okay.
We get a couple more big economic data points this week. We get the jobs report coming out on Friday. Everybody keeps thinking the employment data is going to slow. One thing that people aren't thinking about is the fact that immigration numbers have really gone up a lot over the past 12 months or so. So that's helping generate increased job growth that we haven't had before. I think overall interest rates probably have a ceiling because, believe it or not, people have been talking about the lagged impact of all the rate increases we've already had, and some of that really probably hasn't made it into the system yet. So inflation has come down a lot, and that ultimately should allow the Fed to gently start to lower rates. The perfect scenario would be sort of 1994-95. So we'll see if that plays out.
Yeah, it's kind of interesting that we're thinking, all right, wait a minute. We've been talking about the Fed raising rates for so long and in this rate hiking cycle for so long that you forget that, wait, it's still working its way through the economy and certainly through the financial system. So it's something to kind of keep in mind.
By the way, Carol,
yes.
The employment report on Friday, 240,000 is what economists surveyed by Bloomberg are expecting for a change in non-farm payrolls. Last month, 303.
But see, this is where I would go back to, Michael, and it's something I've been thinking a lot about in terms of wage increases. I get how that plays into the inflationary picture, but I also think good for workers who maybe haven't been making a lot of money for a long time, but that also means that they have money to spend and kick it back into the economy. That's a good thing.
You're absolutely right. People having jobs and people having wages that are rising, that's a positive thing for you and me and everybody else who's listening, having money to spend on things. I think the worry is when wages are rising too fast, that's what causes Powell agita. So I think that before the COVID crisis, wages were rising at about a 2 or 2.5% rate for several years, and now they're right around 4%. So I think if those numbers could come down a little bit, I think that would ultimately provide Chairman Powell with the cover to gradually start to reduce rates. I think when the Fed meets tomorrow, the Fed's meeting today and tomorrow.
Right.
I think tomorrow I think Powell's probably going to say that he's not quite confident that inflation has returned to the levels that he's comfortable with, which will probably mean that rate cuts are probably somewhere off in the distance. But he'll also be data dependent. So if inflation does fall or we start to see some weakness in the consumer or jobs for some reason, that could provide him the cover he needs.
Now, listen, I feel like it all goes back to that, and the data can change. If it does change dramatically, although it's, I think, safe to say that in terms of inflation, they want to see a sticky trend line. So we've got to get through a couple of months' reports, maybe even 3 or 4 before the Fed may back off. Michael Sheldon, thank you. I know we had some technical difficulties. Thanks for picking up the phone so we could hear you. And, of course, we've been seeing you and watching you on YouTube and Bloomberg Originals. Michael Sheldon, Executive Director at RDM Financial Group, joining us from Westport, Connecticut. You are listening and watching Bloomberg Radio.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.